What's up, YouTube? Welcome back. Don with the Don Franz Show, and we have a lot to unpack tonight, especially if you've been watching my last couple streams, because I told you guys, especially last night, so I go live Sundays and Wednesdays. If you're new here, so I trade using these bright yellow zones, call them magic yellow boxes, whatever you want to call them. Price action, that's my area of attention. That's where I want to structure a trade. That's where I see buyers and sellers clashing. We all know more buyers makes it go up, more sellers make it go down, and that's what I focus on. I don't really care about the news or anything like that. Typically, the news is not telling you anything, it's just selling you something. And with algorithms trading, that's why news is like an afterthought for me. Like, it's going to reflect in the charts first, and then I'll probably say, hey, that was a big move. What's up? Which right now we're seeing a sell-off in the S&P, or kind of overall markets in general, and we keep hearing this fear of the Rona again, round two. And at first, I brushed it off quick, fast, and in a hurry, like, no, stop, no one's buying that. Get out of here with that. Today I get two notifications that two separate businesses are requiring masks again. Like, come on, are we really doing this? Is it really round two? They take the India strand, they rename it the Delta variant because the India strand just wasn't scary enough. They gave it a new name, the Delta Force. This one's coming for you. Can't stop it. All jokes aside, it's got a new name and it's hitting the media with some force. And we are seeing a sell-off with it. And right now, so I want to break down a few things. Because, one, we saw some instability in the markets in general. There's a lot of YouTubers talking about a crash. I think the crash happens next year. I'm still on that. We've had some bearish conversations, but the red candles are here. So I kind of want to point out, I'm going to point out three scenarios. We're going to use the actual candles from this because there's really about three ways we can go about this, right? There's a pullback, there's a correction, and then there's a crash. Right now, I'd say we're at the pullback territory. That's kind of where I'm at. Now, I told you guys I bought the dip on Friday, and if it wasn't for that last push at the end of the day, I was red today. At the end of the day, we went screaming. I'm positive $64. Now, for me, that is a red trade because I do trade for a living. This is a source of income that I do rely on to pay bills. And if I don't make at least $500 a day, $500 a day covers taxes and some bills. Without that, I am red. So I don't really have the luxury of this is a hobby for me. This is my life. Not one of those cool YouTubers that makes $500,000 a month. That'd be pretty cool though. Anyway, I need trading to live. So I bought the dip Friday, and then today I was like looking a little bit iffy. I held on to it a little bit. I did lock in a loss in the morning because I bought the S&P a little bit too soon. I just couldn't ride it down. If I held on to it, if I back held, I probably would have been fine. But I did. P&L-wise, lock in a loss on that one. Tesla ended the day green. Facebook was good. Amazon took a little bit of a hit, but those calls took that hit initially in the morning and then hung out. So those calls kept it. I think that implied volatility as we get closer to earnings, which is not this week, but next week. Very interesting play. So anyway, that activity alone is what got me up. A little bit of a Palantir helped out a little bit. So let's talk about the market in general. I'm going to use this. Let's copy the actual candles. Bars pattern. Let's copy this one. Here's a nice little pullback. Kind of, we're almost there. So here's a smaller one. Well, both these are smaller. But let's say we got a little bit more fear coming. Whatever. Let's call this one a pullback. Okay. I wonder if it'll let me do more than one at a time. Now we can go to the Rona scenario. Back here, we got the perfect scenario because this is a correction and this is a crash. Now, ultimately, it was just one giant crash. But as far as correction terms go, that was about an 11% move right there. Shout out Steve. I hate forgetting someone's name. Anyway, that red line is because someone's like, nope, I'm calling it 10% or 11% right now. It's like, well, we'll see. Being cocky. I know I come across cocky or arrogant sometimes. That's kind of just me as a person. I'm not an arrogant person. But I have been doing this for a while. So I drew that line on there and was like, let's see. And I know in the comments said, hey, we're a third of the way there. And he's very right. So last but not least, we can talk about this because that's actually considered a crash. Or we get in a full-blown Rona melt mode. What a cool name. Fear. Panic. I told you there was going to be three. Even better, you got four. Now let's lump these two together because that's basically That's a crash. This is a crash. Like, that's got a capital C. This is all caps. Here's a pullback. Here's a correction. Crash scenario. Now, only because that coincidentally lines up with that coincidence. What I have drawn on this chart right now is this is how the S&P, so what I actually look for and why I only trade the same handful of stocks day in and day out. It's these three guys: IWM, QQQ, SPY, Tesla, Amazon. If you've been following me for a while, all last year was basically just Tesla and Amazon, bread and butter. There is always a trade inside these that I can trade. And why I think I nail my entries and exits so good, efficient. I don't know the word here. One, I'm a master at risk management, right? I'm not rolling the dice. I know how much I'm losing. Whether I have my own problems of, I don't like to say it, but I am human. I get it. I do get confident in a play. I think this is the time, and maybe I do load the boat. I don't always risk the exact same dollar amount, but I do know my risk every time going in. But what I think helps me out a lot is I know the characteristics of that ticker. I know what a big candle looks like and what a normal candle looks like. I know what's boring and what's exciting inside the ticker. I don't need to know that news just came out. I can look at that candle and say, hey, that's not a normal one. What's up? Then I can go searching. And I don't just sit in an echo chamber all day long, just fueling my brain with everyone else's same opinion as mine, really just hammering out the fact that I'm never going to take a loss, which is a big factor a lot of people have. But here's the characteristics of the S&P. This is our normal little engine that could, just trucking along. Then we got a little crazy. Characteristically, we changed. We went off tilt. So that's why that channel is there. Whether we come back into this, now I do think next year we see a correction. This is a correction. I'm talking about a mental correction, a physical correction. The wording is there. We're not going to be on this path forever. I think 2022 we correct. We pull back and then we get on this track, whether it is all the way down here, we go sideways and kind of start this way up, whether we pull back halfway. I think we get back onto this level of increase after the next correction. But anyway, some are saying right now the correction is here, which would be this one. Now, more sellers, more red candles. Pretty simple. Now, when we start to see this, what this just self-fulfilling prophecy is, everybody stops filling, everybody panic selling, like, oh my gosh, I can't take it anymore because I didn't manage risk in the first place. They're selling. Everyone was gung-ho, Ape Nation about AMC, right? And they could fill themselves with all the false data, and they truly in their hearts believe it is right. But look, it's selling. Now, those guys started to, whether it's an ape that is just selling off because he doesn't want to lose any more profits, whether it's somebody that bought at the top can't take it, more selling. That's how this turns into this, or this turns into this, right? It just feeds itself. That infinite loop. All the YouTubers say it. I forgot what they're talking about. Feedback loop. That's the word I'm looking for. I don't know. I'm a little bit on the tinfoil hat theory. Like this whole Rona scare. I think that's the puppet master just showing you still got the strings. Like, it's just an excuse to me in my head. But nonetheless, where I sit right now, I still am on the belief this is the pullback. Now, we do have Powell talking tomorrow, so if we do push up, we gap up overnight. Futures kind of look okay right now. We gap overnight, I have to put my stops in the green, because last thing I want is Papa Powell coming in, spiking that down like a volleyball play. Someone just got set up, the Bulls did, and he hammers it home. Like, all of a sudden, we're down here at this level. So I want to keep an eye out for that. But these are the scenarios I kind of wanted to bring over in you guys' heads, right? So we got pullback. If you ever hear me talking about a pullback, I'm thinking something like this. A correction, something like this. A full-blown crash, we're melt mode, we're going down 30%. This, I think, happens next year. This is what I think happens now. I don't think it's off the table that we correct right now. I think slim chances. Nobody wants to buy the red candles. This is a hard thing for people to really wrap their minds around. For instance, IWM. Now, I'm in this, and so I bought it, my first alert right here. I had an alert right here, alert right here. If you watch my previous streams, you guys know exactly where I bought these. I bought in at just shy of 210 day. 209 was like, man, that second alert went off. Like, I buy at these alerts. And it's funny because I talked about selling calls, maybe buying a couple puts right here, but we kind of looked like we were breaking out. But I said it's horizontal until not. And the comments flooded in. Man, if we could just get IWM here one more time, I promise I'm going to back the U-Haul up. I'm going to buy every IWM share out there. There is going to be a short squeeze just from my account. I'm pushing the shorts out. And then we get there, and then all of a sudden that psychology changed. See, it's a whole lot easier to buy the green candles. The red ones look a little bit rough. Now there's two sides to this coin, so be careful with this advice. If you want to buy low and sell high, you're probably buying a red candle and selling a green one. That, very much easier said than done. Does take a little bit of experience to ever get to that level. But nonetheless, we hit here, and that's why I bought it, because we're horizontal till not. Now, why managing risk is important, because what if you're wrong? I assume every one of my trades are going to be wrong. I think that fear or paranoia just keeps me on the level side of not just YOLOing it and going crazy. Because I got to be honest, when I see the Wall Street bets coming in and they buy something, and they put their $200 in, they're talking about 200 grand, and what do these other YouTubers know? That's the only time I do get FOMO. Like, man, if I could just be ignorant for a day, whole account something dumb, and watch it turn out, like, that would just be amazing. I just can't do it. I am stuck on that trade is going to be red, but I can't not trade. So that's how I manage my risk. That being said, a pullback right now would kind of just make sense. IWM just released their earnings. I even thought it was going to be a red one. IBM doesn't typically do green earnings, but they were a little bit oversold. The earnings kind of, let's see where we're at. Held that and went zone to zone. Hopefully what we're seeing now is kind of a clue to what's happening. We get the meltdown because earnings is going to be awesome, and tinfoil hat theory, they wanted to get a cheap entry. Hopefully that's what my plays are about to show. But right now, obviously, I bought the dip on Friday. I added to my positions a couple of them today. Palantir was a new one. Facebook was an add-on. Tesla was an add-on. So I don't have the following to move the markets, but obviously I want to be right in this scenario. Right now, I'm sticking to what I said the past couple of days. I think that was the pullback. That's a little iffy. Now, let's say I am right. This is the pullback. Green candle, followed by a green candle. We go to the daily, and that held that zone. The buyers showed up. What I'm looking for now is a lower high. Now, what could happen in this scenario is, I'll just paintbrush this out here real quick. Push up. Now, what does that look like to you? I'll make it green to make it easier for you. That looks like a bull flag. I think a lot of people are going to buy that. I think that's probably where I'll short. I don't know. I'm going to have to cross that bridge when we get there, because it very well might just be that bull flag. But going short is easy. You go short here, put your stop just above here. You think that's the lower high being set in. Short, boom, let's go. If it's a lower high, and that breaks the downside, I will assume a lower low. At that point, we might be doing something like this. We have to obviously get the green candles first, which hopefully we're putting in right now. But because I bought the dip, that's how I'm going to manage them going forward is, are we about to make a lower high? We still have earnings next week, and the Qs next week, spotlight is on them with Amazon, Facebook, Microsoft, Tesla. I know Tesla's in the S&P, but tech is going to be all over this thing. So next week will be a big one. If they fail that to surprise next week, then I think that's what sets the tone for this is not a pullback. This is a correction. This is a pullback. This is the correction. We could be seeing something like this. I think it's going to take an earnings failure to probably see that. But let's break down what the Qs actually are. Apple gapped into that zone. That tells me they didn't even want to mess with it and sold off. So we'll see if that gets above it. As of right now, I was tempted to buy this. I did not. I'm going to go ahead and wait for down here at this zone. We know Amazon. If I was just patient, this one would have been a great. So I set this alert up here, and I said it in my mentorship chat. Are you shorting Amazon? No. I'm just going to wait for this alert. Friday comes. I got antsy. I bought it when I should have just waited for my alert. It would have been just fine. Type 1, Type 2, Type 3. You could have played Amazon and either one of these today, and you would have been up. So me being, well, technically down because it's, you know, less than what I should be making. All of that was because of FOMO. Hindsight's 2020. Could have easily just been the dip buy, and I missed it. But sucks. Anyway, held that zone. The buyers showed up right where we thought they would. Now it's on the burden of the buyers for follow through. So it's another thing we're watching out for tomorrow. And then let's check Microsoft really quick. Pulled back into that zone. Right now we are bullish above, bearish below. I think that while I do think pullback, I want to be very clear. That is a knife catch. If the knife catching is not your lane, stay in your lane. Right now, your mentality and your account is more important. And trying tricks and stuff you don't have experience in or don't really have that grasp on is probably just a little bit too dangerous at this point. We know Bitcoin, yeah, sold off a little bit. Ethereum probably following suit. Yeah, so for those of you that are in that riot in Mara, I'd be cautious with that. Let's break down Tesla really quick. Testing some patience right here. Anyway, bought the dip, talking about the trend line, sold off. I'm in recovery mode. And before we get out, let's talk about this because I get so many questions. So many when it's, or you should have seen the chat this morning and my direct messages. I'm just reading the notifications at the top. Hey, I bought this. I'm down. What do I do? Hey, Don, I woke up to, what are you thinking, Don? Well, I'm not a morning person. Do you want to know what the sunrise looks like? Do you want, like, my brain never shuts off. What do you mean? What do I think? That's a vague question. On top of the 900 other questions I'm getting at the same time. I know what he's probably asking, but I noticed something. Every day there's a red candle. We wake up red. Don, what do I do? All of those questions should have been answered before you ever clicked buy. Ask me what do I do when I'm so far green, I don't know what's going on. Hey, how do I manage this? The red is easy. Did it hit your stop? No. Did it gap below it? You're in recovery mode, right? No new lows. So I was in recovery mode this morning. It gapped. I'm like, great, here we go. I let the morning volatility shake out, and then I trail it. No new lows. This morning, I did give things just a benefit of the doubt. What I'm doing is I'm already down. I'm going to risk a couple more bucks. I'm going to give it just a little bit more time to see if it does turn around. So that does amplify losses. You start doing it every time. You're flirting with bag holding. But that's just what I do. So when you hear me say recovery mode, it's we gapped past what I would have normally stopped out at. And now all I'm doing is trailing it on its way up. It's going to give me back whatever I can, and then I tag out. I'm not in it for all-time highs. I'm just going to let it go. I either A, need capital, and I'm going to close that position, or B, I'm going to trail it. As long as this keeps making higher lows, I'm going to stay in it. I've had plenty of trades turn around and just go green after that, and I'm back on track. I don't like panic selling at the bottom. It's not what I do. But I just noticed that pattern today, and it finally clicked. You guys are asking all the wrong questions. You're red. What do I do? Every bit of those questions should be answered before you ever click buy. Click rewind and listen to me say that again. What should I do? What do I do? Now, go over these scenarios in your head. You guys are very good at buying a ticker and assuming the sky is the limit. Like, I know what I'm going to do. You have the cars you want to buy. You know what house you want to get. You know exactly how you're going to spend all those profits. But you have no idea what you're going to do if it's red and goes against you. And that is the most important thing. You guys should be asking yourself, hey, what do I do? What should I do if it goes down? How am I going to play this? I have every defensive plan played out in my head before I ever click buy. And I don't know how I can do that more on these videos for you guys. But maybe I'll just keep bringing it up, and repetitiveness, I'll just beat it into your guys' heads. But that is how you'll get better at risk management. Start assuming the gap's down. Start assuming the red trades. And if the markets get any lower, start assuming it a whole lot more with clarity. Like, that thing's going down. Last but not least, let's talk about SQQQ. I brought it up a couple streams ago. I'm hearing some more people talk about it, and it went up today. Let me just zoom out on this chart real quick. Pretty sweet chart, huh? Starting to slow down, maybe. This is a day trade. You hold it a week, tops, I think. This is going to kill some of you guys. It's a very easy trap for new traders to get into. You see the green. The market sells off and this pushes up. You're thinking, yeah, I'm just going to short SQQQ. The market's going to crash eventually. I'll just start dollar cost averaging into this. And you're forgetting the decay factor. Okay, I'm not talking about the reports and the fees and all that. Yeah, we get it. It's a leveraged ETF with extra fees. I'm talking about actual decay. Okay? If it goes 10% down and 10% up, the underlying, this is red. Okay? 10% up, 10% down, 10% up, 10% down. You will lose money every other day in this particular ticker. And that's just how it will work, right? If you lose a 50% position, you need to make 100% just to break even. So that natural decay right there is going to kill you in this. You could just dollar cost average and you're just buying that decay over and over, and you'll bleed money out. You'll piss it away for no reason. For a crash that might come. Yeah, they had a pretty good couple of days, Friday and today, but why not just buy it when it's trending? I ask myself this all the time. Should I start getting into UVXY? Should I start getting into SQQQ, SPXS? And that's what I brought up the other day on this stream. Was, should I start dollar cost averaging into that? Because I get that FOMO. I know that first initial move is where the gravy's at. That's the easy trade. After that, the continuation gets a little bit harder to play. But I just don't think the decay is worth it, especially now. I think it's a little too late. Now, let's say you're day trading this. It's trending up. You trail it all the way up and it doesn't tag out. I wouldn't close it. Keep it going. As long as the charts are still showing red and you're still there, these are, you hold it for a few days, maybe a week. If the trend is still there, you hold on to it. This is not a dollar cost average position to be in. This the 3 times ETFs, these leverage ETFs, it's just not the best way to go about it. That's why we don't have many of these. If you've been following me for a while, you know about UGAS and DGAS. You know about UWT, DWT. Those are natural gas, oil plays, the VIX, TVIX. All of those were so awesome to be in, but they sucked, right? The market got too directional. It drove one into the dirt and they couldn't even perform. These ETFs are already designed to go to zero. It'll go to zero, it'll reverse split, bring it up here, and it'll go to zero again. That's why it was never actually this much. Well, it was, but these prices up here, it wasn't that much. This just calculates the reverse splits. But this is all it will do time and time again. Go down, reverse split, bleed off to zero again, reverse split, bleed off to zero again, over and over. Now, plenty of money to be made inside here. I've made a fortune. I've probably made your yearly salary on every one of these ETFs, both bull and bear. So I don't want that to be like, this is not a trade. This is definitely one. It is the right way to, you just have to be the right way in it. Get in it the right way. Yeah, you know what I'm saying. The dollar cost average approach, I get the FOMO. I get why that plan makes sense on paper. But if that crash does not come now, you just bleed out too much money. Take that trade. If you want to start sitting on cash a little bit more and more each day, and you can't wait to just put this in with a snow shovel and just dump money into it the day that happens, I'd rather do that than dollar cost average into this. So that'll wrap it up. That's kind of like my idea on the markets right now. I'm still on the dip buy, but I wanted to show off when I say pullback, correction, and crash. Imagine those moves that I showed you guys right here. I think I'm still on board this one right here. We get any more red, and I'm going to go ahead and say it's time for these other guys to probably be right. Maybe it was a bear trap. Who knows? But we're about a zone away from me talking about a correction. So I'll end it here. Guys, if you want to follow what I talk about or do every night, that's my mentorship. That's the WeTrade link down below. The Teachable link is a options or a trading suite that I'm putting together. Options, and I'm currently going through supply and demand. All the links, everything are in the description. But if you like what you see, and I didn't hurt your feelings in this video, hit the subscribe button, click the bell, and you guys will see me. Next live stream is Wednesday. I want to hang out with you guys and have that conversation. So I'll see you there.